follow. And many people.
This meeting is being recorded.
So, and also many people have real estates both in America and Estonia. It will be good to see how what do you recommend as such, as far as our generation goes. We pretty much grew up seeing that real estate is an area that only grows. Americans, I remember back in 87, 89, they saw quite a substantial downturn, something that we discovered only back in 2010. They saw, and by that time, Estonia saw an incredible drop as such, a correction of itself now, which is way behind us, and we are seeing a new big wave going forward. So I'm very glad that AmCham members have joined us. I want to tell you that AmCham is doing wonderfully. We have new members joining us. We have one of the most stable memberships.
Yes, it's like a meringue.
Remember,
you can eat it.
Hey guys, if I can ask you, if you're not speaking, if you could please mute yourself. Thank you.
And so AmCham, thanks to our fantastic team of Daria and also Marlene there, is doing wonderful. Now, back to this real estate. When I did my research back in America, when I studied there, I remember that there were two things they recommended you to invest that were really safe. One was your own company, and number two was real estate. So real estate having one of the safest and best returns also for general in Estonia. I do see that the people here, their trust going to the stock market is lower. Their trust going to their real estate is higher. And there was a time when Estonians said that if you want to be an Estonian, you had to have a domesticized Finnish person somewhere. It seems these times are way over, and what we have now, you have to have a domesticized rental apartment somewhere or rental facilities, some kind, which people really heavily are trusting in. And I would like to hear your opinion. Why is it so, and is it continuing? That being said, welcome to AmCham and Real Estate Special Hour, please.
Yes, thank you, Indrek, for this introduction. First of all, I'd like to thank you for all also being here and giving your time to us. I know that time is actually one of the most precious commodities that we have. We can't buy it no matter how much we pay. So thank you once again. My name is Martin. I'm in I work in CBRE Baltics as a senior advisor, mostly heading these transactions here. And with me today also are Robert, who's our main market analyst and also consultant, and Denise. Hello. Denise is our main capital markets investment sales guy here. So related to the apartment discussion, I think Denise can later give you a pretty good overview of the Tallinn market, since I think he's one of the best experts in that area that we have here locally. So first of all, I would like to just give you a brief overview of CBRE itself. Can everybody see our slides? Yes. Yeah. Yes. Well, CBRE is part of the big three with JLL and Cushman & Wakefield as the biggest commercial real estate firms in the world. CBRE is actually the biggest one. We have over 100,000 employees worldwide, and we're represented in over 100 countries. and our annual revenue is exceeding $20 billion US. Our head office just moved also last year from California to Dallas in the US. But we are a US-based company, and we are mostly handling a lot of Fortune 500 companies and their portfolios. We're managing, coming here closer to the Baltics, we are represented also here in all 3 Baltic states, in Tallinn and Riga and Vilnius, 3 offices, and we have almost 50 employees here. And we offer 6 different business lines here, varying from advisory transactions all the way to valuation and building consultancy to research and property management. So the full basically cycle of real estate management. Let's move on. Next slide. To bring you just a few Tallinn office figures, thought the office could be interesting since that's the main focus area of my work from day to day, and we all also can relate to it somewhat because there's been huge discussion where the office market will go with the pandemic and the lockdowns, etc. So just to show you some figures, we believe that the recovery is almost at the end. See people starting to come back actually at the office. The vacancy rates have been going down. Just last year they were closer to 8 to 9%. Right now it's closer to 6%. While the total stock in the modern day stock in the Tallinn market is increasing, and it's increasing fast. When you even walk around the city, you see construction sites everywhere. So a lot of new stock will hit the market in the next few years, over 100,000 square meters actually, to be exact. And also a lot of money circling the market. We see some bidding wars even for quality products, and yield compression is definitely happening. It's also now come down to 5.5% from last year. It was more closer to 6. So just to show you, we also brought out some interesting projects, the new projects that will be coming in the next few years. All of them are pretty good. See, there's several A-class offices are coming to the market. There's definitely been a lack on the market in the A-class segment, I think, for the past few years. And with the pandemic now also, more and more tenants are looking for that quality as they want to bring the talent back to the office. They want more safer space for their talent and also compete with other firms. Thought it would be interesting to show you, we did last year, by the end of the year, around December, we did a survey in the Baltic states in all 3 countries in the occupier segment. We got 117 companies to respond to us, mostly in IT sector and banking and finance. Those are the biggest occupiers we have here also, like office occupiers. And we got a pretty good mix also in terms of size, showing that almost over a quarter of them have over 1,000 square meter space. So we can see where their head is at in terms of new space usage. And most of them said that they will continue with the remote work project. And actually most of them see as an equal mix, as it's a hybrid kind of element there. half of the time people can work from whenever they want to, and half the time they expect them to see in the office. That's the main part. Not too many answered that they want the full-time everybody back, or even mostly remote. So those two extremes were like a bit lower. Mostly it's somewhere in between. Here you can see also by the size who said what, and we can see that mostly those equal mix of office and remote based work, those are more initially like driven by larger companies. And I think the main reason for that is that they have the capabilities and the tools to build out the infrastructure for this remote work. And we can see there that by largely small companies, meaning 30 employees or less, are focusing on to get full-time workers back at the office. Because I think this is my personal opinion. I think that the main reason is because it's very hard to create this corporate culture and bring innovation to the table while you're working remotely. And this is why like smaller companies are more focusing on bringing people back together, because they need to they need to work a bit harder to get to the bigger size levels. What's interesting was that the projected headcount growth was most companies said that they are, bigger companies said that they are planning to aggressively actually bring more people in. But what's interesting is this next slide is that also they said that they plan on no change of the size of their offices. And this is what I also see mostly in my day-to-day work, is that all our corporate clients, they're not scaling up their premises. Instead, what they ask me mostly is if I can get some capital expenditures or some investments from the owners to actually refurbish their existing premise, and rethinking the usage of how they use their day-to-day space. This is also shown here that dominantly they plan to introduce more relaxation space, more innovation space, focus space, and collaboration space, meaning those just empty seats or just workstation times in the office, those are more in the past, and they are really now thinking, how can we spread the whole floor open? How can we bring people there to maximize their time there? Because now, as also we saw previously, most of the companies want to keep the hybrid work model. So what they're really doing is doing workplace optimization and worker optimization, meaning the precious time that the workers come and spend in that office is fully utilized. And as we can see also on the right graph, is that most companies also plan to introduce activity-based working. In Estonia previously, I know like Telia has been the front runner of this kind of model before. Not many companies have jumped on board previously, but now they understand that the time the employees actually come and spend in the office is more valuable even than we thought. And this pandemic has really put the focus just on that specific segment. And to sum it up, I think the part is that there will be a flight, there's still continuing to be a flight for quality, as we see also the fight for the talent has increased. So one argument how can you bring in more talented people is to have this nice innovative space that people want to actually come to. And one driver that's not fully here yet, but when I talk to my US colleagues, they say is that they see that the managers have understood that remote work in a long run doesn't really work well. So they are trying to make the spaces there as alluring as possible to get those people who are now accustomed to working from home coming back to the office, because of the previous mentioned soft kind of values that I brought up, meaning innovation, collaboration, etc. It's still at the end of the day, nothing beats like a face-to-face conversation with your colleague or in-person meetings. It's just a different level. And I think this is now what we're seeing most companies are putting their focus on. With that, I want to give just my word to my colleague Dennis, who will now give you an overview of the investment market in Thailand.
I think Martin already spoke about my part, so.
Oh, sorry. Okay.
No worries. Maybe let's switch.
Okay.
Closer to the microphone.
Yeah.
Thank you, Martin, for giving the overview of what people actually need. Now, my word here is to say that where is the money and where is the money moving? That's somehow important in real estate, especially for those who have the real estate. And to start off from where Martin ended his discussion is that the money is currently in the buildings what we have in the city, but the money is moving towards the buildings what people need and what we're going to build. And that said, it gives us floor to the actual money and transactions made in the Baltics. Last year, if we sum up all the 3 Baltic states we have in here, the total investments into the commercial real estate that we in CBRE are specialized in was 1.6 billion euros. Compared to larger markets, it's probably nothing, but for our scale, it was one of the highest investments made in the past years. Typical range that we have in the Baltics is annually around 1 billion, which again means that in a very basic level, we have more investments than we have had before. While there is much more room for potential transactions, as the transactions coming in the commercial real estate segment strongly depend on the availability of the assets on the market. And what we have seen in the market for already a couple of years, not only last year, is that the same issues what Indrek spoke in the start, the inflation is the top, and the money printing in general, and the interest rates potentially going up is a topic. And all those things also affect the real estate to the ground level, and the question that for those people who have the assets and who are ready to sell them, typically ask themselves that if I'm going to sell now, what will I do with the money? Where do I have the opportunities to invest the money? And I will say that if we just take the statistics and say that what has been the transactions amount, then we leave part of the story behind. And going forward, surely the question is that is only that history what we can predict towards, and is the Ukraine crisis what we have at the moment going to affect the market? Surely it is. On what scale? Not very hard to predict. But considering what we have had so far since the Ukraine war started in 2014, and now predicting based on that the future in the Baltics, and then so far the Ukraine crisis hasn't had much impact to the Baltics real estate market. We have had in the ground level of the businesses, but real estate has been somewhat more stable. And going from the Baltics to Estonia, then the same, what we can see in general in the Baltics, that we had a very good year in real estate, is also reflected in Estonia, that the total amount of transactions we had in this year was roughly 400 million, which is the highest number from 2015, when we had slightly more, 500 million. Which brings us to the question that, okay, this is the total number, but how it's actually diversified, and what are the main segments? In the charts, what you can currently see, we don't include residentials. So the residentials are a different topic. So this is only commercial. The residentials, what you can see in the chart is professional, institutional investments in the full residential buildings. Because those investments are also handled on the same logic as for example, office buildings. To sum up the last year, together with few previous years, what we see in Estonia and what we see in the Baltics in general is quite similar. The money historically has been mostly in the office segment and shopping center segments, and now the new trends, which step by step come also to the Baltics, are changing the market. And one of the main trends was what's changing the source of money and where the money moves in real estate is the question of logistics real estate, and the need for new logistics spaces to step up with the demand in the core business side. So definitely last years, all those 3 years have been greatly benefiting to all the logistics real estate owners and those who are developing new logistics facilities. Meanwhile, office has been and continues to will be the number one investment field, where larger investors feel themselves comfortable investing in and are continuously looking for the investments. Why we had in 2021 less investments in office compared to other sectors is purely because we had limited number of buildings available for sale. The demand in office segment is much greater, we can see in the statistics, and if this year will bring, let's say, some existing owners to the market who, let's say, feared what might come up with the Ukraine crisis, then my own comfort zone lets me to say that there are still enough investors on the market who would want to enter the office cash flow generating real estate, and that were ready to do the investments regardless what's going on in Ukraine, because we have also the local money available here. Shopping centers has been very important market in the Baltics, but this is slightly going to the secondary segment, I would say. It's still on top, and as we can see in the chart, it's number one for the last year. But this is purely because we have a lot of shopping centers and we have a lot of supermarkets, which definitely generate the demand. But on a broader level, if you think about where investors want to invest and where they are looking in the future, then due to the increasing e-commerce, due to the question of mobility, and due to the question of do we actually need so much shopping center space at all, this sector is in general okay for investments, but it's not the hottest sector at the moment. And everything in real estate, especially in the commercial real estate, comes down to the level of return, that how much money you can actually make if you invest €1 to the asset. And here we can see the basic figures of the prime, so the best real estate we have on the market, and what you can actually make for the money. And as you can see, comparing to different figures, office buildings and residentials are the ones which are generating the least money for your investment. But on the other hand, it means it is considered the least risky. So definitely the core locations in Tallinn and elsewhere are the places which are the highest demand, and then apartment buildings which you can rent out in current case, and office buildings which you can also rent out are the ones which are the prime, and then retail and logistics follow. In retail, the smaller stores are more in demand, and the larger centers are considered somewhat more risky, and therefore investors want to have a premium on those. While I mentioned that in logistics in general is a very hot topic, and the investors want to expand their portfolios a lot in the logistics segment, then in that slide you could question that how come if the returns are higher, and that's all true. But the question here is that the returns in the logistics and all those big box type of business segments have always been higher due to the core risks in the segment. But if you compare the same sector, what it used to be 3 to 5 years ago, comparing it with other sectors, then the premium on top of with the city center offices, for example, has decreased, and we see continually that the gap has been decreasing even fastest of all those different sectors. And coming to the actual examples of transactions, then in this slide I have put not only Estonia, but also the other Baltic countries, and not only the last year, but 3 past years, to just indicate what are actually the biggest deals being on the market. But you can already see, so I'm not going to go into the details of the past deals, but based on that, I will say a couple of words for the future. So what we have seen in the past, and what we most likely are going to see in the future as well, is that a lot of those big figures and big transactions are based on rather limited amount of large complexes. So we do have 1.6 billion for the whole year for the whole Baltics, while one individual transaction can take already 10% of the total stock, the total investments made in the region, as for example, the Alpha shopping center in Riga. So those large-scale transactions impact a lot of the market. Meanwhile, the key elements, how the transactions are made, are on the same level, and then the smaller ones are made. So those are like in principle still made on the same logic as the smaller ones are. But that said, it's important to follow the big transactions in order to understand what's the largest capital doing in the region. And we continuously have different negotiations with various investors from the Baltics and abroad for new investments into the region. And in principle, in all subsectors of real estate, the demand currently is at least the same what we have seen in the past few years. And definitely it's even exceeding the demand what we saw on average in the past decade. So the demand in the Baltics for quality real estate and quality cash flow in general, so to speak, the return of the investment is very high. And definitely this is also seen in the other segments, so also the apartment market. The highest demand as it's mentioned in the other slide, is currently for centrally located office buildings. The secondary or the second segment, which I would say very important, is the logistics. And while offices are in the center of the city, for logistics real estate, and the core location is typically at the large intersections of the highways where the logistics parks are located. So there are definitely those properties which want to be inside the city. Meanwhile, this is not the core. There's still the largest buildings, the largest facilities want to be in slightly outside the city where transportation is some more comfortable. Speaking of the price levels, what we have seen in a yield basis, so the returns, as the returns have shrinked and rental levels have increased, then it also comes down to the core level of the square meter price. So in all segments, the square meter price has increased, and we don't see any reason, despite the geopolitical issues that might influence the whole market, that there should be any change towards decreasing the square meter price. So the ones who have real estate in principle can get the return in doing nothing, so keeping it. Now going to the more detailed transactions what we have here in Estonia, this is just the top of transactions that we have had since the beginning of 2021. I'm not going again to the details, but you can read yourself. Then, as I mentioned, the largest transactions take the core. Meanwhile, there's a lot of demand also in the middle segment. So a lot of transactions are building up the market activity, and so far, in each building sold, there have been typically more than one investor available to acquire it for more or less the same price. So again, from that angle, we have seen so far the demand exceeding the supply, and if nothing changes remarkably, then I see the same going forward. Question is the pricing, question is the quality of the tenants, the leases, all that kind of details what influence the investments done in here. What I would like to highlight from the Estonian transactions is the newcomers to the market. Historically, the largest transactions have been held between investment funds operating in real estate. Epson Capital, East Capital, Baltic Horizon, those kind of investment funds. From the last year and perhaps also the year before, we have seen a strong entrance from investors who don't have a background in real estate, but they have now came to the area, the largest transactions level, where typically only the professionals operate. So in that slide, you can also see that the largest package deal, which included 3 different properties in Estonia, was made in the beginning of this year by a businessman who generated his money in different fields of real estate. And the same we can say about this Stockmann deal, where energy group VKG bought 2 retail assets in Tallinn and Riga. And going forward, it seems to us that more and more capital from other sources, rather than just a pure real estate, is impacting the market. And definitely it brings again the question that if there is even more demand in the market where we already see very strong demand, then it will have impact to the pricing of assets as well. So from that angle, again, I don't see a large need or a large change in that perspective. And last but not least, regarding that slide, majority of the transactions, both historically and at the moment, are still happening in the Tallinn region. We do have nice cities elsewhere in Estonia as well, but they don't compete both in the largest transaction scales, nor in the question of where the big companies want to enter their productions, want to go with their headquarters, nor any other large-scale transactions fine. So still Tallinn is the core, and Tallinn will stay in scale of Estonia, the place where the transactions are held. So the largest transaction in last year outside of Tallinn was in Pärnu, where the do-it-yourself store Bauhof property was sold again to interested party, investors related to big bank. So the property was bought from real estate fund to non-real estate people. And one aspect which definitely hits the headlines and is interesting perhaps to you as well is what the residential market is doing. And today I'm not going to speak anything about the average square meter price. That's also good part of the market, but I'm going to speak from our angle, from CBRE's angle, how we see it and what's the commercial real estate investors part of that, which means the large scale rental houses. Perhaps you know that in the other countries in Europe, in the western part, and in the US, rental housing has been a topic for already decades. In Estonia, it hasn't been the case since the independence. Over 90% of the people have owned their homes, and they continue to do. But during the past few years, there has been a very strong change in the market that larger investors entered the rental apartments market as well. And the best where you can actually see it visually is in Tallinn, in the Mustamäe district. As you can see in the map, there's during the past 3-4 years a lot of new developments in the old residential area, which are now focused on making the return to the investor rather than just being sold to the people on who actually live in there. And this is the field that we also see is going to be one of the biggest trends going forward in Tallinn in the next 5 years, 10 years, wherever we can predict. Mustamäe has been the first district to change, but it's definitely not the last. And if you maybe rule out some specific areas in Tallinn, then in principle we are going to see the same change in all the districts in Tallinn. We continuously have negotiations with different investors who are ready to do similar investments into the Tallinn, and on location basis they are quite flexible, and the investors who we already see in Tallinn are also looking for the new expansion opportunities to Lasnamäe district, to central Tallinn, to northern Tallinn. Christina has been very popular among the local inhabitants, is similarly popular among the investors. So all the similar aspects that we see in the normal market are also reflected to the rental housing market. And just a few pictures of the buildings we have in here already in Mustamäe. So these are the ones. Since the first buildings came already in 2018, and then the largest impact on that market has been this year, the change of 2021 to 22. And this is mainly because in order to come up with something new after rental housing in general, specifically in Estonia and in the Baltics, and then they needed evidence that this can also work in here. In principle, we all understand that if it works in Helsinki, it works in Berlin, then not most likely it works in here. But now we have the evidence, and now we have more and more projects coming up. Efton just opened their first rentals in the intersection of Karaka. LHV pension funds, one of the largest players currently in the market, has opened their second complex in Aiandi, just behind Mustamäe shopping center. Scandium, and the developer of the small so-called micro apartments, is also expanding heavily and now looking towards all kind of rental houses, not only the micro apartments. So what I have said elsewhere as well is that for the small investors who invest into the individual apartments and also rent those out, this is the change of market. As we have evidence that the big complexes have at least 100 apartments, not 180, but let's say 100 to 200 apartments established, and if in one location a new investment is done and 200 apartments appear, this is different than just having a couple of or 10 apartments in a location. Surely it doesn't rule out that different investors couldn't compete with them, and definitely the market will be much more diversified, and in principle everyone can make money off that market. But just the question is that how competitive are the smaller investors and how well they're defending their returns compared to the ones who do it professionally. So that's about it. And to conclude the investment part, I would say that the market is very strong, and if nothing remarkable happens, then the market will continue to be strong. We have very wide range of real estate in the market. All of that is appealing to the investors. Just the question is the price, and if the price is right, then transactions happen. What I haven't included in the slides is the sustainability and ESG topic, which is also a very hot topic and becoming more and more popular. And definitely this is a thing for the professionals to bear in mind, that all the real estate built today has to be sustainable for the upcoming decades, where the expectations are shifting more towards the sustainability. But in principle, it still comes to the question of how much money you can make, and compared to other sectors, real estate continuously is an interesting sector to make money. So that's shortly about Estonian real estate from the business perspective, and we have some questions. Yeah, we're open to questions, so happily ready to answer those.
Guys, I think there are some questions in the chat room. I can see there are 2 questions, I think, from Kevin Ellis. Kevin, do you want to ask those, or we can just read them out from there?
Now we can see, so we will take one by one and after those. First is to Martin. Activity-based offices. So
Could you explain activity-based working in more detail?
So by activity, the question is, could you explain activity-based working in more detail? So activity-based meaning what's the nature of their work, whether they're doing more like sales oriented work where they need to have like dynamic discussions, or they're on the phone constantly, they need calls, they need this energy, uplifting energy, or whether they are more focusing in on doing accountancy or something like that. I think in the office area, so you need more like a focus and quiet time. I think that's what the activity base is more meant.
Or to make a very, very simple example, the question is what you're doing. If you're having a Teams call, like at the moment, then you need a meeting room. If you just want to do analysis and Excel, then you can be at the desk. Meanwhile, if you want to do analysis and on the same time do some controls, then, for example, my colleague Robert here don't like me to be in the same room. So I take some small meeting room where I can do the calls. So all those kind of factors that I don't sit on my designated desk where I'm supposed to be, but I move around in a floor to the places where I can do my work the best.
Evan, I think you're on mute because we can hear you. Or there's something, a technical issue with the sound.
Okay, we will take the next question then. The next question is the investment from within the Baltic states or external sources? Answer to that is both of them. We have a very strong investor base in the Baltics, meaning mostly Estonia and Lithuania. The number of investors in Latvia is somewhat less limited, but the investors, even the local ones here, don't do investments only in the country they're located, but they consider mostly all the 3 Baltic states as the home countries. And then, of course, we have a lot of investors from Scandinavia and Central and Western Europe. From the States, we mostly have the largest investors. We don't have so much mid-scale and lower real estate transactions done by American investors. But when the question is again that assets ranging from 30 million, 50 million or 100+ million, then there the location is not an issue to any investor operating in Europe. And then the other details are on focus. So it slightly depends on the size of the asset being sold, but I would say starting from 5 million already, the local investors also compete with a wider range of investors in the market. And now we have the question of most of the loans involving residential real estate in Estonia are based on floating interest rates. What is going to happen if the ECB will raise the interest rates? First, yes, that's correct, that most of the residential loans are fluctuating interest rates. And a very simple answer to that is that if the interest rates will go up and monthly invoices from the banks will go up, and people will have to cut down on their other costs what they spend monthly. Surely that's a bad thing to the people, and I don't see many people winning from that except the banks perhaps. But I would say that the core of the question is slightly more complicated, and it comes down to the macroeconomics of Europe. When in the States the Fed can increase the interest rates slightly more easily than in Europe. We have very different countries in the same monetary system, and increasing interest rates perhaps by 1% doesn't change so much the business in the Baltics, but it might have very strong impact to the Southern Europe. So this is the question what's also on the table, and there isn't much consensus on the topic. Meanwhile, majority of the analysts I have spoken with and seen elsewhere then don't predict so high interest rate increases in Europe as maybe seen in the States. So it's kind of like open question where we will see interest rates after a few years. But if the interest rate will go up, then definitely it will impact not only the residential real estate, it will impact all kind of real estate market. So if we're open for further questions, so be open and ask, we are here.
Yes, we have 5 minutes left of our valuable time. So with the experts, so it's your chance to ask any question you might have on the topic. I guess there are no other questions. But we have recorded the event, so those of you who would like to have access, we'll send the link. If you would like to go back and maybe look at some slides, I believe the slides will be also available, right, guys? After the event, we can send them out as well. And yeah, if you have any other follow-up questions, this is the great member network we have. So these guys are just one email away. We can easily connect you with any of them. Thank you so much for joining. Thank you so much for this great, insightful hour to our CBRE experts. Hopefully it was useful. And yeah, I can see thumbs up over there. So thank you and have a safe and peaceful evening. Everybody stay safe and healthy and see you soon at the next event. Thank you, guys.
Thank you. Thank you. Bye.
Thank you. Bye.
Bye.